Hello, you're watching Dukascopy TV. Today I'm joined on the line by Ilan Solot from Brothers Harriman for a LatAm update. So let's start with Brazil. The Brazilian real fell to a 7-month low over concerns the country will struggle to recover from a recession, as an election poll showed a tightening presidential race. Now Ilan, share with us your views on these downside risks and how do you see the real reacting to upcoming data and events?
As you mentioned, a lot of the downside risks have to do with a change in the perception of how the election is going to play out. But I will also note that a lot of the reason for the Brazilian real weakness is that the dollar has been strengthening broadly against most of majors and emerging market currencies. If you look at all EM currencies, they've all weakened in line with the Brazilian real. Perhaps there's a little bit of an exaggeration due to the polls, but that is just one component towards it. At this point, we think that the Brazilian real will be relatively well contained below the 240 level. It might overshoot, but we think the central bank will step in to try to prevent excessive weakness beyond that point.
Now, Ilan, let's move over to Mexico. What are the main trends we are seeing with the Mexican peso, and what are the driving factors?
So at this point, most investors seem to be still optimistic about Mexico in terms of fundamentals and especially the continued development of the story of the reforms in the oil sector and opening up Pemex. The problem is that in the short term, a lot of that has already been priced in. What we're seeing now is Mexico, again, like I mentioned in Brazil, being caught between this strong dollar trend move that has an impact of weakening all emerging market currencies. Because the Mexican central bank tends to be relatively hands-off with the currency, it doesn't really push back too much. So Mexico trades maybe in a lot more volatile fashion than other emerging markets.
Ilan, what countries in Latin America are you most bullish on?
At this point, we have, in terms of for our medium-term views, we like very much both Peru and Colombia. Both countries are very well managed from an economic perspective. Their fundamentals are mostly solid, and that both governments in these countries have embarked in a new infrastructure spending program, and they seem to be very well substantiated, and we do think it will bear fruits in the future. It won't be immediate, but in the medium term, I think both of these countries will receive a very good strengthening from these new projects.
Ilan, thank you very much for your time today. Well, viewers, do stay tuned as we have plenty more coming up on Dukascopy TV today. Goodbye for now.